Get a market update now. Tom Piotrowski over at CommSec. Good morning, Tom. How are we shaping up today?
Pete, we're going to kick off just in negative territory, not by much, down by about 10 points or 0.1%. So that was a reflection of a mixed tone as far as Northern Hemisphere markets are concerned. What happened on Wall Street, Pete, was that stocks were a little bit mixed, and we saw that in response to the latest manufacturing numbers that had come out of the US. And within these figures, we saw a continued moderation where prices were concerned. That's important, given the preoccupation with inflation, and that goes hand in glove with the moderation that we saw in US inflation in Friday's figures as well. So this translated to quite a decent drop where interest rates were concerned. We had a 2-year government bond down by about 8 basis points to 4.82, a 10-year down by 10 basis points to 4.40. In human language, that means that the expectation for that second rate cut later on this year in the US, which has proven elusive from time to time, firmed up a little bit. And normally that would help stocks, but it wasn't emphatic in terms of its contribution to the gains last night on the stock side of things. The Nasdaq did finish with 1/3% improvement. The S&P 500 just in negative territory, and the Dow was down by 0.5%. But the context for that, Pete, is that we've just come off the back of a very strong month. In the case of the Nasdaq and the S&P 500, it was the best May that we've seen since 2003. So it would be reasonable to see these markets consolidate a little bit under those circumstances.
Yeah, correct a little. Good point. Okay, Tom, thank you.